Hello and welcome to the VITA Services for West Michigan State Tax Preparation Training for tax year 2015. Again, this is Amanda and I'm just here to moderate this training. This training is set up to take place following the federal tax law training, so you want to make sure that you do parts 1 through 5 prior to taking a look at this. It's going to make this information a lot easier to understand once you understand how the federal tax law works and once you know a little bit more about the tax preparation software. So first I like to start by going through who needs to file a tax return. Really, the state indicates that only a person earning over $3,950 has to file, but we do recommend that anybody with any sort of earnings files to at least see if they owe or if they're getting their refund. We want to make sure that they get any dollars that they are entitled to, even if they earn under that amount. You'll also find that a lot of the time we'll have people coming into the tax sites who don't have any sort of obligation to file a tax return, mainly people who earn Social Security income, who have that as their main source of income coming in. They are not obligated to file any sort of tax return because it's non-taxable income. However, you'll find a lot of people coming to the tax sites that received Social Security that are just coming in to file a couple of the state credits. So first we're going to go ahead and start by talking about the Michigan 1040 form, and then we'll segue into the tax credits, which is really where the meat and potatoes are of any of the tax law information. I think you'll find that a lot of the things that I'm going through, a lot of the information just pertaining to the Michigan state return itself is very easy to understand and is pretty simple, especially after going through the federal return and completing all of that information. So when you start a Michigan tax return, there's a couple of differences and there's a couple of things that you'll want to make sure you have available for you. So the federal information is going to flow directly over from the federal tax return directly into the state tax return. There's not a lot of information that you'll have to enter, which is very nice. So you don't have to go through and re-enter any of the income. You don't have to enter any of the dependents. All that information will come right over. You'll also just need to know the school district code and the county code. Those are included in the supplemental materials for this module, but they'll also be available to you at the tax sites. Each time you come into the tax site, you'll either bring in your folder, or there will be folders if you just want to leave it at the tax site. But there's folders for volunteers that have a lot of the different codes and numbers that you'll need to reference often. It'll have bank routing numbers that you see a lot. It'll have these school district codes. It'll have county codes. So there's a lot of resource material available to you, even on the state side. I know we've talked about the 4012 on the federal side a lot and some of the federal supplemental material and resource material, but there's still definitely a plethora available for you for the state side of tax preparation as well. One of the big things that I like to make sure that you're being diligent about is indicating if somebody is disabled on the federal side. And again, that's because it carries over into the state return, and there's some pretty big tax implications based on that. So some of the differences, there's only 3 filing statuses at the state level. So if somebody has indicated that they're head of household or if they're qualifying widower, then they're actually just considered single by the state. So within the state, there's only the 3 different filing statuses: married filing jointly, married filing separately, and single. And the same with the same-sex marriages. So it's going to only go to married filing jointly or married filing separately. Again, the software will take care of all of this for you. There's nothing that you have to indicate, but just know that there's only the 3 statuses. So if you see that somebody is indicated as marked as single on their state tax return and they had been head of household on their federal side, that's okay. That's in fact just the natural process of how everything works. So again, the program does that for you, but I do like volunteers to be aware of that. The exemptions and dependents, they carry over as well, so there's not any special information or any additional information you have to put in regarding any of the exemptions or dependents that are being claimed. It comes right over from the federal side. The one point that I do like to point out is that the exemption amount changes if somebody's being claimed on another tax return. So the best example for this is if there's somebody that is working and they're a teenager in the home of their family and they may come in to file their own tax return. When we indicate that they're being claimed on another tax return, their exemption on the state side drops from $3,950 down to $1,500. Again, this is something that I just like people to be aware of, but the tax program, the TaxWise, will calculate it automatically for you. So it's not much you have to think about, but if somebody does have a question, this is exactly why I like to go through this information, so that when you're at a tax site and you're preparing the return with a client, we want to make sure that you understand that as well. Again, there's some special exemptions if somebody's disabled. So for the state of Michigan, somebody can only be disabled until the age of 65. After they turn 66, they're no longer considered disabled. At that point, they're just considered senior, and their disability exemption is not calculated. The program will prompt you to check a box that indicates if somebody is 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 applicable for this exemption. The easiest thing that I do is I just always go back to my main information page and check the age of the client. And if they are under 65, or if they're 65 or under, I go ahead and select that special exemption. Otherwise, just leave the box unchecked and the program will keep it highlighted red. But it brings it to your attention, and it's something that does come up at the tax site, so I like people to be aware of that. That is one of the things that you as a taxpayer have to pay attention to, and that the program does not automatically calculate. There's also an additional exemption if somebody is disabled due to a injury sustained while they're in service, and that's something you have to indicate on the Michigan return as well. Again, these are pretty simple things. The form really highlights everything that you need to fill out pretty well. I think you'll find that after you get a couple of tax returns under your belt, that you'll find it very simple to go through the Michigan return in itself. So again, the income just carries right over. One of the things that I do like to point out is if there's pension income, so one of the 1099-Rs on the federal side, the state now requires this Form 4664 to be present. The program, again, will automatically show that you need to fill out that form. It'll highlight red in your forms tree on TaxWise. So keep an eye out for that. And basically all it's asking for is to indicate if the pension was from a public fund or a private fund. If it's public, it means that the person was employed through the government or through the school system, some sort of public entity. If the person if the person retired and they were from just any sort of manufacturing company, any other company, then it's considered private. If you need to look any of that up, again, there's going to be some resource material on that at the tax site, but do know that the program is going to go ahead and ask you to fill out that form, and you're going to have to understand what that means. So again, I like to just to go through and confirm and reiterate that it's so important to make sure that the forms on the federal side are filled out correctly, and that's exactly when it comes into play is on the state side. So everything that you indicate on the federal side will have an impact on the state side, and that's why it's so important. This is just showing you a 1099-R, so one of the pension forms, and how important that distribution code can be. It's so small on the tax form, but it really has really big impact and big implications for the tax return itself. Taxable income, so your taxable income will flow right over from the federal tax return. There's not anything that you need to add. The additions and subtractions are automatically applied. And then the adjustable gross income on the state side is then subject to a tax at the rate of 4.25% for this upcoming tax season. On page 2 of the Michigan tax return, there's just going to be something that highlights asking you to fill out if the person had use tax. I'd just like to start by saying that nobody ever at the tax sites has indicated that they've had use tax. So it's very, I try to explain it as simply as I can to the tax preparer as to not confuse them. But use tax is basically in place if there's been a lot of ordering of things through the internet or through catalogs. Basically, if there's other sales tax that should be paid out of the tax return. So for most people, this is not the case, especially at our VITA sites. There's not any sort of large purchases happening across state borders or anything like that. So Know that the use tax will highlight red, indicating that you need to fill that out on the tax form. More than 9 times, 99.9% of the time, you'll just indicate no. Obviously, confirm this information with the taxpayer, but I've never seen it happen at any of the tax sites. So there's refundable credits and payments, and that's the last part of the Michigan tax return. So again, the withholdings will flow over from the federal side because you've already entered the W-2 information. So any of the withholdings are going to flow right over to the state return. Any of the earned income tax credit will flow over from the federal side. There is a Michigan earned income tax credit, and it's basically just 6% of the federal earned income tax credit. And again, TaxWise will automatically calculate that for you. So really the only thing that you have to calculate for the credits on the Michigan return and do any work for is what's called the Michigan property tax credit. And you'll also want to check and see if the person is eligible for the home heating credit. Again, if there's any sort of tax due or refund, you can have that direct deposited. We go ahead and e-file everything just like on the federal side. If there is an amount due for the taxpayer, then they'll want to set up payment arrangements with the Treasury. They can either mail in a small payment and then the Treasury will contact them to make continuing payment arrangements for what's owed, or they can contact the Treasury and sit on the phone and work out a payment arrangement. If it's a small amount, they can go ahead and automatically have it deducted from their checking or savings account as well. So there's a few different options, but they're very similar to what's on the federal side as well. Make sure that the bank information is correct. So again, the bank information doesn't flow over from the federal tax return for whatever reason. So you'll want to make sure that you re-enter the bank information. This is typically where it's easy to make a mistake. So just be careful with the bank numbers because there's so many that you're entering them correctly. And then just so that you know, the program is automatically designated to e-file all tax returns. You can select for the return to be paper filed though if the client would like to request that. So that's basically the information for doing the Michigan return. Again, it's very simple and easy for the most part. But the big things and the most amount of work in regard to the state return are working on the 2 tax credits, the homestead property tax credit and the home heating credit. So we're going to jump into that information now. Again, make sure that you're writing down any questions that you might have. There's definitely some great supplemental material on our website to go through some of this information regarding credits. But 2, if you have any questions, just jot them down and we'll be happy to go through them with you. So first we're going to talk about the property tax credit. One of the things that comes up at the tax sites that a lot of people don't know and where we like to make sure that people are also receiving empowerment and education and understanding of their tax situation is to know that you do not have to be a homeowner to receive the property tax credit. I know the name sounds kind of deceiving that you would think that you would have to own a home and you'd have to have property, but you can claim the property tax credit as a renter as well. First, there are some differences. There's some differences though, so let's go through those. For homeowners, the home has to be in the name of the taxpayer. The property taxes have to have been charged to that person. And then the person can only claim a home on their principal residence. So if sometimes a person is in the middle of selling their home, they might have had one home on the market, but they already have another home that they've bought. If that's the case, and they can only claim the credit for their principal residence, the one that they lived in the most for most of the 2015 year. The clients must have a couple of documents with them. They must have the property tax statements. So there's a statement that comes out in the winter and in the summer. They have to have both of those because we have to know the property taxes that were charged to the client for both summer and winter. We also have to be able to look at the taxable value of the home. These are requirements in the tax software system and also by the state. If this information is missing, there's no way we can file the return. So if especially if somebody comes in and they just have Social Security income and they're only claiming the property tax credit and the home heating credit. Confirm that they have the paperwork with them before you have them fill out the intake and interview form. Make sure that they have both of those property tax statements, because otherwise we're not going to have the information we need to complete the return. And it can be really frustrating for the client if they fill out the intake and interview form and only to find out that we can't actually complete the return for them. There's a couple of different eligibility financial requirements. So the household resources, which is another topic we'll get into in a moment, they must be below $50,000, and then the taxable value of the home cannot be any greater than $135,000. At that point, the person is ineligible. The credit is calculated if somebody falls within those guidelines. It's calculated on the taxes that was paid and the income coming into the home. So this is just an example. I like to show people what the property tax bills look like so that you can get used to looking at them. You'll see on this form that the taxable value is on the upper right-hand corner. It's right next to the state equalized value typically, and most of the time those numbers are the same, but sometimes they'll be different, and you'll want to make sure that you take the taxable value and not the state equalized value. That taxable value is what we're looking for. At the very bottom is what you'll want to look at. Just take the total amount due. So in the tax software, you'll go through and you'll use a scratch pad. You'll write summer taxes and you'll write winter taxes. And so this is the amount due for the winter taxes. Also, you'll have the forms with you at the tax site that provide all the different school district codes, but the school district codes are right on these billing statements. So I like volunteers to know that and just be aware of that. So there's different rules if there is a property tax credit that's being claimed by a renter. A person that's renting the home has the lease absolutely has to be in their name. A lot of the time you'll find people coming in and you'll ask them, did you pay rent? That's really not the correct question to ask, because a lot of the time people just pay rent to their parents or to a family member. That's not income that's being claimed by anyone typically. So it would really get the taxpayer on both ends into some trouble. So while it may generate a refund, if it's not done correctly, the state will catch it. They're oftentimes auditing people that are low to moderate income. We get a lot of, and I don't want to say audit, they're more of reviews where they go through and they review the client's information. They'll look at their income, they'll look at what they were paying in rent, and then a lot of the time they'll request some documentation for the client to send in. So they'll send the taxpayer a list of documents that are required, and on the top of that list is the lease with the person's name in it. So the lease absolutely has to be in that taxpayer's name who's claiming the credit. There's really no exception. There's no way around it. We're not doing anyone any favors by putting in information that is incorrect. The rent has to be counted for the number of months that they lived in the unit, and a credit is calculated if the client's income is low enough and if the rent is high enough. It's basically how the credit is calculated. Sometimes a lot of questions come up just regarding what if a person has a shared lease. If that's the case, as long as both people's name is on the lease and they split the rent 50-50 or however they split it, the person is entitled to claim their portion of the rent. But again, they will probably be reviewed and the state will probably ask that they mail in their lease. So I do like to just kind of forewarn taxpayers about that, to not spend any money before they receive it, and that the refunds are always subject to review, and we have no control over that. So some other information that you'll need if somebody's trying to claim the property tax credit as a renter, they'll need the landlord's full name and address. They'll also have to know the residence that they lived in. So I know this sounds kind of obvious, but if there's somebody that's moved a lot, and you've got to remember that this could be information from a year ago at the point that we're doing the tax preparation. So just keep in mind that that we absolutely need to know the address of the landlord, the address of the unit that the taxpayer lived in, as well as how many months they lived in that unit and the cost of the rent. If a person lives in a trailer, they can still definitely claim the property tax credit as a renter because a lot of the time they're paying lot rent. They can definitely count that. It goes on the form exactly the same as the other rent, only there's a box you can check that indicates that it's for a mobile home. So something that comes up a lot is people that live in what they call alternative housing facilities. So this is any unit that's subsidized, anything that receives Section 8. There's a lot of different apartments that have different rental situations, and it's called alternative housing. One of the great things that we're going to have available this year for the first time is an updated list. The Treasury Department has agreed to give us an updated list so that we know what all these different housing facilities are, and we can indicate that on the tax return. So it'll take a lot of the guesswork out of some of these apartment units where somebody comes to you and they say, I paid $54 in rent. That's a huge indicator that obviously there's some sort of subsidy and that we have to take a look and see, you know, if the apartment is subsidized, if it's Section 8. These are conversations that are kind of hard to have with the client because a lot of the time the client doesn't know the information. Typically, the client does know if they are on Section 8, and then when we have this list available by Treasury in January, this will be a huge help in taking all that guesswork out. So I'm hoping that with the alternative housing facilities, that this list is going to be a huge help in preparing these returns and helping with taxpayer information and making the whole process a lot easier on them. So there's a lot of information on household resources. This is something huge. This is a newer change. It was new, I believe, 2 years ago. Instead of all the income information is going to flow over from the federal return. But in concern to the property tax credit and the home heating credit, there's a couple of other things that the state takes into consideration, and those are things that you have to add into the tax return. So if somebody's receiving non-taxable income, so if there's another source of Social Security in the home, maybe there's a dependent that receives Social Security, that has to be counted as a household resource. So this income is not taxable, but it's taken into account when the tax software is calculating the tax credit. And that's the correct way to do the tax return. You'll oftentimes find that this puts somebody over the income threshold and they're no longer eligible for the credit, but this is actually the correct way to do it. And we've gotten in a lot of sticky situations where we've tried to help sort people's information out. They may have said, oh, well, I forgot to tell you that I receive child support. Well, that's something that counts as a household resource, and the state knows that the person receives that. So if we don't report that income, then it's only going to be a hindrance because it's going to make the whole return subject for a review on the state side. So we want to make sure that we're able to explain household resources to clients, that we look at every single form of income coming into the home. Another time that this comes up a lot is you'll look at somebody's rent and they may just indicate that they receive Social Security. If that's the case and their rent is higher than what they receive all year in Social Security, you know that there's got to be some other form of income coming into the home. So it might not be taxable income. It might be a gift from a family member, but we have to account for that because otherwise the state will, and then, like I said, it's only going to hold up the return for review. There's other adjustments that we can put in, and this is located on page 2 of this credit. And another adjustment is HMO, any insurance premiums paid. A lot of the time people pay out-of-pocket medical additional premiums, especially if they're seniors, and they'll know how much they paid, and we ask them to bring this information as well. It can basically just increase the property tax credit because it decreases the taxable income on the state side for the credit. So know that you can put in any sort of insurance premiums on page 2 if somebody's paid any additional out-of-pocket insurance premiums. Also included in that is a standard amount if they've insured an automobile. There is a portion on auto insurance that covers medical, and so the state allows for a standard $130 to go under the insurance premiums portion. And all of this, there's some information on the practice examples that show you exactly some of the things that I'm talking about to give you some visual inclination of what's going on in the tax software and how everything works for the state side. So again, I just like to reiterate that the household resources is huge. We want to make sure that we're capturing everything. So like I said, it might be anything that's non-taxable. It's probably a lot of the time going to be child support. It also includes any sort of welfare that's received by the state, with the exception of food stamps. We do not count food stamps anywhere, but if somebody receives any sort of cash assistance, or they might call it welfare, on the tax form it's called FIP, families, or FIP. I forget the acronym, but it's line 28, I believe, and if they've received any income from the state just to support their housing needs, then that has to be counted on the tax return as well. The money, again, is not taxed. It just needs to be accounted for in order to calculate this property tax credit, and it also carries over to the home heating credit as well. So again, a lot of the things that you're going to see are gifts from family, Social Security, so just SSI. There's no place to put SSI. Again, that amount will likely be $731 that the person receives each month. That only goes on the property tax form. It's not Social Security, regular Social Security, so it doesn't go on that federal form. Like I said, I've already kind of mentioned some of the other forms of income that you'll see a lot: gifts from family members, the assistance from the state, as well as child support. There are some adjustments that will carry over from the federal tax return, so that's nice. Half of the self-employment tax and the student loan interest will carry back over. And then I just talked about the $130 that you can put in for the insurance amount for any sort of, if you had full coverage on your auto insurance. So like I said, make sure you jot down any questions that you might have on the state information. There's a lot of supplemental material on our website as well, so make sure you check that out. And we're happy to answer any questions as you approach any of that information or any of the example problems with any of the state information. So the home heating credit, this is another credit that a lot of people come in to receive. It's designed to basically help supplement the cost of heating for low-income individuals. It's available to any person, so they can be the homeowner or they can be a renter, but the house or the lease needs to be in that person's name. A lot of the time people will put heat bills in someone else's name because they may have an outstanding balance and they pay the bill, but we cannot use anything unless it's the homeowner's name that's on the bill and the lease or mortgage in order to apply for this credit. This credit is only available until September 30th, so sometimes people come in and they like to complete prior year tax returns. This is a credit that we can't go back and claim. It expires at the end of the year in September every year. So there's no way we can go back and claim the home heating credit. So there's a couple of different things that I would just want to go through for the eligibility. Again, the heat has to be in the client's name. It can be included in the rent if a person lives in an apartment complex. That's okay. And it's kind of a weird period, and you'll have to have the amount for the heat that the client paid. A lot of the clients, if they do have a bill in their name, a lot of their clients do have they bring in their bills with them. They have DTE as their heat provider. And that's the case. DTE bills are kind of nice to look at because they have the amount for the home heating credit located right at the bottom of the bill. If the client doesn't know where to look for it, you can show them so that they know for the future. If they don't have their bill and they look like they're going to be low enough income to qualify for this credit, then you may want to have them get on the phone with DTE, who can provide the information over the phone. You'll want to do that right when the client gets there, though. You'll want to make sure that if they're there to claim this credit and they don't have the information, that they'll want to get on the phone right away, because they can sometimes be on hold for quite a while obtaining this information. You'll put the county code in on this credit. Again, that list for county codes will be available for you in your resource information. Exemptions will flow through. There's not really any sort of calculating you have to do. You just have to know the amount of the heat bill and fill out a little bit of information on the return. If somebody's eligible for the home heating credit, they are usually they will have been eligible for the property tax credit. Not always, but you'll want to fill out the property tax credit to make sure you are accommodating any of the non-taxable income, because that has to be calculated and considered for the home heating credit. Again, the bill has to go, the client's bill has to be in their name in order for them to receive a voucher. So sometimes if the bill is not in their name, if they have heat included in their rent, they'll receive what's called a heating voucher. And what that does is basically it provides this voucher form that gets mailed to the client. And at that point, they can sign over the voucher to like an electric company. The home heating credit is really designed just to help supplement cost of utilities. So it's in the past, people sometimes received a separate account that could be deposited into their bank account. I'm hearing that this happens less and less. The client still may receive that. Again, if the heat is included in their rent, they may receive just a check for half of the amount of the home heating credit. But it's good to kind of explain all of this to the client when they come in. This is an example of that DTE bill and where you can find it. So again, it's going to be on the bottom of the page 1. I have it circled right here on this page so that you know where to look for it. It'll say directly amount paid for heat for October 31st, 2014 through November 1st, 2015. It'll say that right in the bottom in that area that I have circled on the bill. Again, that's just for DTE though. You're going to have some other situations come up. If somebody indicates that they've paid for fuel oil or for propane, you'll just have to take their estimate as to what they paid for that out of pocket. So that's all we have for the state and local training. Again, it's pretty simple, but you'll definitely want to go through some of these examples and some of the information, look through some more of the resource material. And again, a lot of this just takes some practice and working with the software itself and going through some practice examples. Again, if you have any tax questions or any questions on this information, feel free to contact me, Amanda Grover, or Carl Lewis, our new tax program coordinator. We're happy to answer anything for you, and thanks for watching.